All right. So today's topic is the 5-day HELOC. And we want to spend some time covering what it is, guidelines, the process, etc., and also why you should care as a real estate agent, how it can help you with your current business, and why it's another reason you might consider our reload program, our dual license program, as a way to increase your revenue without having to do more real estate transactions, right? Without having to list more houses or write more contracts for buyers, etc. So why don't we start? We'll start with some of the basic. Actually, let me start with this. Let me start with the major sort of bullet points, right? The features and benefits of the 5-day HELOC. And these are the points that I've been touching on in content and advertising campaigns that I've been running to generate opportunities, clients for this program. I've been generating leads and folks applying, and so I've been hammering on these points as like points of emphasis. And we've got some marketing collateral that I'll share my screen on, or share my screen as we go over that. First and foremost, it is a very quick and easy application process. Okay. The hook is, what's that?
It's all online.
It's all online. It's completely automated. And the sort of the hook for it is that you can complete your application in 5 minutes or less. And quite honestly, the feedback that I've had with conversations of people who are applying, it's not false. I mean, that's pretty accurate. And I'm going to bring this up here. So this is an example flyer from one of the HELOC lenders with this. So all 100% online application. It is a way that your clients can tap into their home equity without giving up their low mortgage rate, right? So if they refinanced 18, 24, 30 months ago, they locked in a super low rate. They've got a lot more equity now, most likely, than they did then. They would like to tap that equity to make renovations, to pay off some consumer debt, to maybe, to unlock some capital to do, a real estate investment of some kind, whatever the case may be. This is a great way for them to do that. They can get up to 400,000. Okay. So, they've got to have the equity, but they can get up to 400K with terms of 5, 10, 15, or 30 years. It is, they fund extremely quickly. So in 5 days or less from a complete application, these can fund, right? So, if you're watching this live and you've got clients, or maybe yourself, this HELOC makes sense for, you could have the funding before Christmas, potentially. Okay. It is a standalone HELOC, and they can you can have it in first, second, or third lien position, and the rates on it are not the same as a typical 30-year fixed mortgage, but they are lower, generally speaking, than personal loans or credit cards. So, for the right person, it can make a lot of sense. And if you want to see the application process, it's pretty simple and all online. This is what it looks like.
They also do, another thing to mention, they also do a soft credit pool. They don't do a hard credit pool.
Yep.
So there isn't really a downside to applying. They're not gonna be dinged on credit.
Yep. So if you want to see if you want to experience this for yourself, don't apply if you're not interested, but you can see at least what the application looks like at joshvips.com/HELOC. joshvips.com/HELOC. That's a consumer facing application, and that's the completely automated application process. And then for us, we have a back end sort of CRM for these applications that we can see as the application comes in or come in, what offers are being made. And also we can see the folks that get declined. And I point that out because just because someone is interested and they don't get approved doesn't mean we can't help them. In fact, Jordan and I have been working with an application that came in yesterday, I think, or maybe it was, I think it was yesterday. And he did not qualify for the 5-day HELOC, but we're exploring an option for him that might get him the solution he was looking for. And I won't share the personal, the specifics there. But we follow up and follow through with everyone that comes through here to see if there's some other solution that may work for them.
Yeah.
So Jordan, do you have anything to add to that before I pull up? I'll just pull up some of the requirements for those that are curious about sort of the nuts and bolts.
No, I think there's a couple questions. Is there a minimum loan amount? There isn't really a minimum loan amount. There are maximum loan amounts though, and note that it's a tiered system depending on if it's an owner occupied or non-owner occupied, and then what's the credit score. But it goes all the way up to $400,000. I think non-owner occupied is up to $200,000. And typically the credit score that I want to say, I think the minimum 640. I'm pretty sure. I think they upped it from 620 to 640 recently. So you might have content that says 620, but nonetheless, we can go over these. And then we had another question that someone asked if can we request a person appraisal rather than a desktop? That would be a situation where we would follow up on, right? If the desktop doesn't come in, just because this is the intent is for a very quick and easy process.
Correct.
It's not meant to go through the entire home loan process like you traditionally would. When it's truly a 5-day HELOC, is that they turn their stuff in, they will get their money in 5 days. And investors, it could be as little as 2 to 3 in some cases. With that being said, there's no way we'll get an appraisal within that time frame if we don't do a desktop appraisal. Is it possible? Yes. There are products that we could change it to or move it around to. HELOCs that we can do a full person appraisal, but it's going to be a full underwrite, full appraisal. It's going to be a little bit longer process.
This is one specific program or product that we offer. But the point I want to really press on is we have loads and loads of options, products and programs, depending on their need and whether or not they would fit in this box. Just because it wouldn't fit in this box doesn't mean we can't find another and maybe potentially better solution for the client. This is a convenient way with very minimal interaction, all online, etc., for folks to tap their equity without losing their current low rate. These are the requirements, and Jordan, you mentioned that they may have just upped it to 640, the minimum FICO. We'll confirm that. But you can see the FICO requirements, depending on whether it's a primary or a secondary an investment. And then you can see a little bit on the fees. Types of residence, a primary residence, a secondary property, right? Non-owner occupied and even investment properties. But the amount that they can tap into, as Jordan mentioned, varies depending on that. It's 400K for a primary, up to 400K for a primary. It's 200, half of that for a secondary or investment. They will, as I mentioned already, they will occupy a max of third lien position. Okay. So just something to keep in mind, depending on how many liens are on the property. The applicants relying on income from employment are subject to verification of income. Okay. Retired applicants don't require a VOE for whatever that's worth. DTI must be less than 50%. I don't know why they have business hours on there. I'm not really sure what that is. But you can see here more details, etc. And for anyone who is interested and would like this, just shoot me an email and I can send you the specifics here. Quite honestly,
we
you
actually
don't
have a question
necessarily
on max LTV. If you want to go right here, scroll down a little bit.
Yep, sorry.
Right here. So Wes asked, what's the max LTV? It's going to depend on credit score. It's going to depend on occupancy type and what lien position will determine how much money you can pull out. What is the max LTV? Pretty much everything has the same max DTI, which is 50%. But depending on if it's owner occupied, and let's say they have a 760 credit score, right? So you can see there between at 400,000 to 75%, but at 300,000 they go up to 80%, up to 250. If they're only pulling up to 250, they can go up to 85, right? There's levels to this that will kind of determine what the max CLTV a client can pull, but the maximum they can go is about 85%.
Yeah, it's a sliding scale, right? Depending on risk and different factors there. And once again, this is an option. It's not the only option for folks that have equity and want to unlock that equity in some way, shape, or form. Okay. Another program.
Can I just go a little deeper on an example?
Please do. Yeah, absolutely. Of course.
Okay. So what Josh is talking about is when we do an application, right? And they fill out the application, it gets rejected, right? It might get rejected automatically. This is an automated process, right? This is it's very short, very quickly. Just because it says no doesn't mean that we're not going to follow up with them. We had an applicant a couple of days ago that it got rejected due to credit score. Credit score is too low, but many as you know, FHA loans go down to a 500 credit score. Okay.
Repeat that because some people don't know that.
Yeah. Well, if you do now, FHA loans do go down to a 500 credit score. Most banks will have overlays on this, but that is usually a go-to when someone has a low credit score trying to pull equity out of their house is swap them to an FHA loan, pay off their existing, and pull as much as we can out, depending on their scenario, right? It just depends on their scenario, but this specific client had a great equity position. So anytime you're doing anything under a 580 credit score on FHA, you are going to need to have at least 10% equity, and then a cash out's limited to 80% anyway. So you're going to have 20% equity anyway. This particular person had 50% loan to value. So there's a strong possibility that they're probably going to qualify with that type of loan to value. FHA is very lenient with those value positions, right? So that would be an example of us taking this one product that we have, okay, them doing an application and then possibly having to switch them to another product. So even if you don't quite fit the box, doesn't mean that it's or a client doesn't quite fit the box, doesn't mean that it's the end of the road. We're still going to try to figure out, where can it fit? Maybe we do have to do a full appraisal. Maybe we have to do a desktop appraisal. Whatever it is, we're going to try to point them in the right direction.
Yeah, I pulled up our info here because there was a question in the Q&A box about how someone can reach out. You can any of the following on here. I'll explain what the QR codes are in a minute, but we'll also get both of our contact info in the chat for those that are interested and want to explore in more detail. So it's important that you that we ask good questions and explore with the clients, right? And that's something that just in the last 48 hours, I'd say at least half of the applications we've got for this, it wasn't the right solution for what they were looking to do. So I'll give you for example. Jordan gave you one where it was a primary residence and the credit score was too low, which is why they got the auto decline. And now we're looking at, okay, well, we could still potentially do an FHA refi. He's got plenty of equity, et cetera. But I've spoken with two folks that they have their primary residence and they have at least one investment property. And for various reasons, they need some access to cash. One needs access to cash because the investment property needs renovations. Okay, it has some major system malfunctions, and the LTV on it's about 50%. So there's equity position there. And the other one was just in a situation where I don't remember why she needed the cash. I don't know if she wanted to pay off some consumer debt, or I'm not exactly sure. But they don't fit in this box. But both of them are potential DSCR loans, which we talked about last week. And if you missed that, if you go to dscrclass.com, dscrclass.com, you should be able to register and watch on demand, or you can find the replay on our YouTube channel, Wake Up Real Estate. But that may be, that's a path or a potential solution that we're looking for both of those folks. Several of the others, because it's an automated process. Like I got one this morning where the address didn't match up. It's a condo and the address, the auto address, right? And so we're stepping in and helping, be the solution providers. I guess my point is that I want to emphasize here is, though this is automated, it's not hands off for us. We're following up and following through with every applicant that is coming through to see, if someone is going through the work of completing the online application, there's a reason why. And so we're doing everything we can to go the extra mile to make sure that we're doing everything we can to provide them with a solution, even if it isn't the 5-day HELOC option. Lawrence says, how do you gross up, quote unquote, SSI income in calculating DTI? So this is a little bit of a technical question that I'm going to default to Jordan on.
Yeah, you would. On a traditional loans for sure. We're going to gross up depending on the loan program that allows. So FHA is 15%, conventional is going to be 25%. On the HELOCs themselves, the answer would be yes. I'm pretty sure it's 15%. I'll have to double check that. I haven't had that specific question yet, but I feel like I've read that somewhere that they'll gross up at least 15%. Any non-taxable income, I don't think it's specifically SSI is what I read. But I'll find that in the guides and I'll see if I can answer that before we get off here.
Okay. Jay said, what about commercial property? So this program would not work for a commercial property. However, we have many options as far as that goes, depending on the situation, depending on what you're looking to do, what, the value, the income that's coming from, there's a whole bunch of factors there, Jay, and I would be more than happy to chat with you or Jordan and I both to see what it is you're looking to do and what options or solutions there may be. We have commercial funding options. We have business funding. There's any number of different ways that we can go, and that's one of the nice things that one of the reasons that we're with NEXA is we have so many potential avenues available where we can just help. We can help more folks in more situations and with more scenarios than many others might be able to. So he says refinance 4,000, want to pay off the current private lender. We're getting into technical things here, but Jay, how long have you owned it? As long as you've owned it for more than 6 months and ideally more than 12 months, we should have lots of options for you. Jay, just reach. I did drop you my contact info. Just reach out to me and let's chat. We can. Jordan, would that be one? Would the easiest thing for Jay be to get him that one pager, even though it's I'll
do the one pager property first, just to see. and
Yeah.
then from there we can it's soft pull, right? So
Right.
it
So
gets us
so
going.
just I know this isn't on the 5-day HELOC, but a situation like what Jay is describing or DSC alone, what we typically do is just have a 1-page intake form with some basic information, enough that we can go and shop and get some quotes and program options before we do any hard credit pulls or anything like that, to see if we're even in the ballpark of an option that would make sense. So Jay, if you just shoot me an email, I will, I'll send you that little 1-page, it's a fillable PDF. It'll take you, 30,
5
60
minutes.
seconds.
Yeah.
Todd, on the HELOCs, is this a line of credit with flexibility to use and withdraw when you need, or is this a loan with a fixed rate and fixed monthly payment? Hope this makes sense. So it's kind of in between.
They're going to present you with more than one option.
Right.
So there are ARM options, there are fixed rate options, but it is a true HELOC. So it's something that can be paid down and pulled back out of. And then we also have closed loans options too. Like, I'll give you an example of where I've had a client recently. I had a client that was trying to do a second mortgage on her primary residence, right? So she could pay off some consumer debt. She didn't quite qualify for this 5-day HELOC. So we went to a different route, and we are doing a bank statement closed-ended second mortgage. Okay. I know that's a lot of words there, but that would be an example of how many different types of second mortgages or HELOC products that we have. Is there are even bank statement ones and DSCR ones, for investment properties, ones that are just based off the property.
Yeah. So I'm looking at one right here that came in. The client immediately gets access to these different options, and it's literally 1, 2, 3, 4, 5, 6, 6 or 7 options that they can choose from, and what makes the most sense for them. So it is a line of credit. This 5-day HELOC is a line of credit. But we do have, as Jordan mentioned, loans, let's call them home equity loans, that are closed end seconds. Vern says, are Axon and NEXA two different companies, or are they tied together somehow? Jordan, do you want to, I could try to answer that.
Yeah,
But
so
they
are yes and no. They are technically two different companies, right?
One big umbrella though.
Yeah, I work for both technically. It's under the same umbrella, owned by the same people, right? So an Axon is a correspondent lender. So they have lenders that are tied. They're able to give out their own money. They have a warehouse line and give out their own money, where NEXA is a brokerage, where they have more a lot more options. So if we don't have, you can, and then you can also work at interchangeably to both. So if I have a product at Axon, an internal warehouse line product that I can use, I'll use Axon. If I need to broker it out, then it's going to go through NEXA.
Yep. Hope that makes sense, Vern. If you want,
yeah,
if you want to chat with either us in more detail.
But it's owned by the same people. So yes, they are tied together.
And it's not a coincidence that one is just the reverse of the other.
Yeah.
One is just the reverse of the other. So here's an example of some of those, which isn't why I wanted to bring this back up. I wanted to bring this back up because I want to let you know that we've got our contact information here. The QR code top right is to our traditional mortgage application, where someone can go create a free account and do a traditional application. That would not be for the 5-day HELOC. The 5-day HELOC is its own standalone automated online application. And that you can go to joshvips.com/HELOC. I'll put that again in the chat. But the main reason why I wanted to bring this back up is I teased or mentioned at the beginning of this that for some of you, this may be another reason to consider dual license status and what we call our RELO program, where you have a mortgage and a real estate license, and it opens up the opportunity for you to earn mortgage revenue in several ways, actually, because of the way our company is structured. And if you scan the QR code at the bottom left, and if you're listening on audio only, you can go to wakeup.realestate/relo, RELO. I'll put both of those links in the chat then. But you can scan that QR code, and there's a little 6 or 8 minute video explaining or giving you an idea of the revenue or income possibilities with that dual license program. Now, it's for illustration purposes only, but for those that are interested, you do need to get your mortgage license in order to participate in that program. There's 20 hours of class that you have to take, and you have to pass a test. But for those that, that's of interest to, we'd love to chat and explore whether it makes sense. I was talking with a great agent in Idaho, a fellow by the name of Brent that I've known for many years. I was talking to him about an hour and a half ago, and he's jumping in on our reload program for several reasons. He's in the real estate game for the long haul, and so for him, it makes sense to, why not look at adding additional revenue streams off of the activity and the things he's already doing, and giving him more opportunities and abilities to earn revenue off his database, which in our call, he shared that he's got 7,000 or 8,000 local contacts in his database, which is, he is sitting on a gold mine he doesn't even realize. And that's one of the things that we're going to do first and foremost with him and for him is build out and take advantage. What's the word I'm looking for? To rejuvenate and reconnect with those folks to give him an opportunity. Wes, so does Josh work for NEXA and EXP or EXP? It's both, Wes. So I'm with I am a relo. Okay. I am licensed at EXP. I'm a licensed real estate agent with EXP Realty, and I have a local team, and I have a sales organization that is distributed throughout the US. And I'm also licensed on the loan originator side and with NEXA. So that's what we're talking about.
Yeah, you're like 17 states, right? Something like that.
Something like that.
Yeah, 12 states or something.
Yeah. Yvonne, a question back to the HELOC, which is great. If the HELOC is used as a first loan or in first lien position, is it compound interest? If used, would the interest over time be less than a conventional loan?
No,
I think it's simple. It's simple interest.
Yeah.
Yeah.
Is that what you're talking about? Say that again. Say. So
she's asking if it was in, it doesn't matter, first lien or third lien position, is it compound or simple interest?
Well, it's going to be what you have pulled down on it. Let me look at it. Give me 1 second here. I can almost guarantee it's not simple interest. We do have a product though that is simple interest. Yep. It is a HELOC. It's so if that's what you're looking for, right? Specifically a simple interest HELOC or a simple interest loan. I know of a very specific product that we have that we do give out. And it can take first lien or second lien position, and it can be for investment properties and other things. I'll have to look on this specific one. I don't know if I'm assuming it's compounding, but I'll double check into that, see if I can find it.
The point is, though, we have a solution one way or the other, depending on what you were looking to do, Yvonne, either yourself or for a client. We do have it's a fantastic product, and we're one of the only.
It really is. It's a great product.
Access. Yeah. All right.
We probably need to do a class over that one, just specifically that one, because it's so massive.
That's a good point. We're gonna definitely have to add that to the January calendar and talk about that one and how folks can use it. It can be a great financial instrument depending on the client, their income, their equity position, etc. It can be a wonderful financial tool and instrument. We're going to keep this one short and sweet. because this is pretty simple and straightforward, in all honesty, and really is a great way to open doors and conversations. And so here's what I'll do in wrapping with this. With the replay, for those who are interested, I will share some of the short form video content and some of the other marketing collateral that I have been using to promote or market this program and product, just for those who are curious, or for those that are already licensed LOs or thinking about it from that perspective. There are also ways that you could weave in some of the messaging with your existing database by text or email or on social or even with direct mail. And then we'd love to chat. If you have questions about this program or any of our products and programs, or if you're interested in the relo opportunity, the dual license opportunity, we'd love to chat with that or about that as well. And next week, I don't know that we've decided on our topic for next week. We're getting close to the holidays, but you'll have to stay tuned on what our what product or program we're gonna dig into next week. But for now, Jay, I will definitely reach out to you. I saw you had posted this. Wes asked, will there be a replay on this? So Wes, I set this up so that as soon as it's done rendering in Zoom, it'll be available on demand. We'll also post the recording on our YouTube channel, Wake Up Real Estate, and also at wakeup.realestate. And if you have any trouble finding it on any of those places, you can just email mike@growwithjosh.com. Yeah, there you have it. Jordan, thank you. If you or someone you know wants to see if they qualify for the 5-day HELOC, just go to joshvips.com/HELOC. Otherwise, you can scan the QR codes, reach out to the names and or numbers on the screen, and hopefully we'll see you next week.
Thanks. Have a good one.
Thank you.